Hello, my name is Mark Chalmers. I'm President and CEO of Energy Fuels based in the United States. And our company is very unique in the fact that we are the critical or forming the critical mineral hub in the United States for uranium, vanadium, rare earths, and potentially medical isotopes. So if you make an investment in Energy Fuels, you're investing in all things critical materials in the United States of America.
The critical minerals hub of the USA. Not a bad accolade, not a bad accolade. Hey, I wanted to catch up with you. Bit of news out lots of news out from you at the moment, but I want to talk to you specifically about the rare earths component, because our number one search term on our platform, rare earths, number one read articles, rare earths, number one viewed article videos, rare earths. People are getting it. It's very topical. We're seeing companies in Australia like Arafura, Vital Metals, raising capital for their development projects and finding it relatively easy. Is it easy out there, or is it just one take every day as it comes?
Well, man, I think this downturn in equities over the last couple of months made it a little less easy. But I think what I'm seeing is this whole paradigm shift, that people seem to be getting this dependency on various things that we have with Russia and China, and people are getting that we need to reduce carbon emissions and we need to improve our ability to electrify, the equipment that we have and the vehicles we have and the wind generators, whatever it is. So I think when you look at the sort of the fury of activity from governments around the world, focusing on electrification, reducing carbon emissions, I think it's a great place to be in. None of these things, just fall in your lap and are easy. But I have never seen such a focus on, basically deglobalizing the world on a number of these materials that we know are so critically important.
But what's happening at the moment in terms of you've got to move things forward. You've got this growth story in the shape of the rare earths component of your critical minerals hub. With NEO on board, you're making some hirings as well. You're clearly committed now. You're committed financially. You're committed in the marketplace. And I'm just working to what end? We've seen a lot of US bills being signed at the moment for billions and hundreds of billions of dollars to kind of make this kind of green energy economy in the US a reality. So how are you getting on with either conversations there or accessing capital there? And as one of the proponents of the Section 232 way back when, are you front of the queue?
Well, I think we're getting further up in the queue. The initial fundings on the rare earth front with the government pretty much were fundings that were organized before we even got into the rare earths. But we are amping up our presence in DC again on all the things that we're doing, rare earths and uranium. I find that these new initiatives, a lot of them, like the Manchin bill, are still, people are trying to digest exactly what that means. But the bottom line is, I think the average person in America and around the world gets it now. They get it. I think they had a hard time understanding it. But look at what we're doing. Our main focus is on the rare earth front, we need to secure more monazite. And you're aware that we haven't quite closed yet, but we should close at the end of the month on this project in Brazil, Bahia. We still have our relationship with Chalmers. We've got a relationship with Hyperion X and others that I believe will come on board in due course. So monazite, and I think monazite will really differentiate us from others because we've proven these other steps. The crack, the leach, the separations, and moving towards large scale separations. We have proven we can do all those steps. We haven't gotten to large scale commercial separations, but I think we are, in the next few years. So yeah, look, it's an exciting place. We hired a COO, PhD, metallurgical engineer. His name's John Urey, very well known in particularly the Denver community. He's not a rare earths guy. He's not a uranium guy, but he's a very experienced process guy. So So we're taking all the steps that we need for full integration at world scale.
Right, but what's that mean? What's that mean in reality today? So I'm trying to understand this timing. I'm trying to understand the scope of what's ahead of you. You're already producing mixed rare earths, right?
Correct.
Rare earth carbonates specifically. Who's getting? Why are you producing it? Is that going anywhere? Is that just between you and Neo?
It's going to Neo right now, and at commercial scale, but small commercial. So we're still trying to get more feed. We are going to start. We're actually in the process of designing a crack and leach facility for the monazite, separate from the mill, because we have to share a lot of the infrastructure in the mill with the uranium plant. So the next step is to come up with a commercial scale crack and leach facility, and that would be in the order of about first phase 10,000 tons of REO, which, to put into context, with Lynas, with their current production, is about 16,000, 17,000 tons REO. So large scale. So first step, get the monazite, working on the crack and leach. We're doing the lab scale separations. We are doing some of the commercial separations of the material that we ship to Neo. We're looking at maybe an intermediate step where we have small commercial separations, so we can be doing NdPr quicker than the large scale separation plant. So it takes time, but we are definitely making progress. When I look at where we were, Matt, when we first talked about rare earths, say 2 years ago, and then I look at where we are today, I'm very pleased with the progress we're making.
Yeah. Sorry, I've got to try and work out what it is that you just said. So Lynas doing 16,000 ton of REO. You were talking about doing 10,000 ton of REO. So just a couple of questions on that. So in what time frame do you hope to be able to work your way up to 10,000?
Well, it depends on how much monazite that we secure.
Yeah. Okay.
But we're looking at the crack and leach in the course of say 12 to 24 months to be able to do a carbonate, up to 10,000 tons REO, which would be far more than Neo could take. But it could be as an intermediate step to the final separations. It could be sold to Sauvé in France. It could be sold to Chinese. It could be sold perhaps into Thailand or even Japan. So, I understand where a number of people, it's hard to get their head around how this is moving, but it is moving in a very purposeful way. And we can make money with it. Given enough monazite, we can be profitable on making carbonate alone before separations.
Right.
And
but where I'm coming at this from, Mark, is like Lynas is a $9 billion Aussie company. That's about $6.5 billion US company. And I think the Canadian dollar, Australian dollar are one for one. So just trying to help people understand the size of the prize if you get it right. Okay. And how much money you'll need to spend to get there will be the questions that you'll be answering over the next few months and years. And the same in terms of the scoping of it, the economics of it. So that's the bit I'm trying to get to. At which point do we start to understand the money side of things, and therefore potential growth of your company just based on the rare earths?
Look, I think in the next few months we can update the market with what we look and what we feel the economics are. We have a very good handle on these steps, particularly crack and leach, and a much improved understanding of the cost of doing the separations. We've still been doing work with Carester in France and the experience we have on site. So look, I hope to unveil in the next couple months, the sort of the economic pitch and picture of how we go forward. I can tell you right now, Matt, it's very exciting and it's competitive. We don't require subsidies. Now, if we do get a subsidy from the government, like some sort of a loan package or infusion of money from the government, we will certainly look at it or consider it. But it's taken some time to get that information. But we've already processed getting close to 1,000 tons of monazite, and that's a pretty good pilot plant. And so we know the recoveries, we know the reagent consumptions, we know the retention times, we know the final quality. And then, you move on to the separation steps. So yeah, it's, I'm not an arm waver, but we are going through all those details right now as we speak, and we're extremely encouraged on where it would fit in terms of the world global market.
Okay. Last time we spoke, you told me that you had moved some uranium. I'm going to bounce from rare earths to uranium. You'd moved some uranium to one of the processors, so I can't quite remember where you moved it to.
ConverDyn, yeah.
ConverDyn, that's it. You did move to ConverDyn. And it was only after the event we kind of worked out why.
Well, the beauty of when you move it to ConverDyn is, that's a conversion facility to convert to UF6. And it's easy to transfer the material from ConverDyn. Now, a couple things, we signed these contracts back in May with 3 contracts with 2 utilities. Now the delivery doesn't start until next year, but also with the uranium reserve, there was the DOE put out the proposal asking for proposals to sell uranium to the DOE. That's the first time in like over 50 years. Okay, so this is a pretty significant step by the US government. And one of the requirements, it had to be at a conversion facility.
Yeah.
And so we had material at the conversion facility. The DOE is considering the proposals, and I know at least a few companies, US companies, have submitted proposals to sell. They are expected to make their decision in about 2 months' time. It'll be this year. And Bob's your uncle. We've got uranium at the conversion facility that can be basically transferred over to the DOE very quickly if we are successful in selling some of our product to the Department of Energy. But it would be this year.
But that's the bit I'm getting to. You're quite understated. I know you don't do arm waving. You are understated, but no one realized that would be part of the condition by the DOE. Did you guys at industry got a heads up on that one? Because we certainly didn't.
Well, it's pretty common to have the converter holding inventory.
Right.
It's either sitting at your yard or it's at a conversion facility. So it's pretty common practice to have your material at a conversion facility. So yeah. But it was a requirement for the DOE proposal. It had to be at a conversion facility. So you got to kind of be ready to go, right? And the DOE wanted material, U.S. origin material at a conversion facility, could be transferred quickly, once they made the award. And so we were just ready for that. So yeah, we'll see where that comes, but it would be nice to get, a bit of an infusion of additional cash into the company. You know how hard we worked on this Section 232, and I didn't think it would take so long to at least to get them started. I hope it's not the end, because this whole dependency on Russia is right at the fore when it comes to the U.S. utilities, where about 20% of the U.S. utilities are securing nuclear products from Russia. So the government gets that. And so it's all kind of a perfect storm on all these, elements that, that we're focused on.
Okay. So no heads up, just careful planning from you. That's what I'm hearing. I'm trying to work out how the system works, as it were, because with all of these new bills coming in, we've kind of got things like the Inflation Reduction Act, right? We've got the Climate and Energy Bill. Numerous bills, numerous senators putting their names to things which could be positive for nuclear and therefore uranium. And I'm just trying to wonder how does this system work? Do you get a bit of a heads up and say, look, there's a chance over here, there's a chance over there. I know you've been very careful to say, we don't need any government funding. This stands on its own 2 feet, but it's always nice to have a bit of free cash on the balance sheet, right?
Yeah, and we're still trying to figure out what all these various bills mean. But yeah, they are positive for clean energy, nuclear power, and critical elements. I mean, they mention rare earths, they mention vanadium, and again, I think this is where these governments are waking up and saying, hey, we've got to deglobalize, we've got to provide some additional incentives for companies to come back and onshore, these capabilities. So yeah, I mean, we're not going to turn down any support from the government, but at the same time, we're going to drive our bus because at least when we're driving our bus, we know when we want to make a left turn or right turn or how fast we go. But it is encouraging, and it's quite interesting because some of our board members are deeply rooted in the oil and gas business. And when we discussed it at board level, a couple of them said, well, it doesn't look like there's anything in those bills for the oil and gas industry. So, that's pretty difficult, for a lot of these oil and gas groups. But at the same time, we focus on what we're doing.
Yeah. Okay. Well, let's see how that unravels over the next few months, and how much is actually dished out and who to. A lot of sticking with uranium as well. A lot of M&A, a lot of new entrants. It's like the history is repeating here. So M&A, we've seen this sort of love triangle between UEX, UEC, and Denison fighting it out. Nice competitive tension. I'm sure UEX shareholders are happy about that. We've seen some of the development companies in Africa, getting funding for their projects, put in place. We've seen lots of young companies. I think at least I counted this morning on our energy show, at least 6 new Australian entrants into the mix. It's getting busy out there. It's getting frenetic out there. But what's not getting frenetic is on the trade side. It's still a little bit muted. Is that because there's not a lot of inventory to mop up, or is that something else? What's your reading on the situation, having signed 3 agreements recently yourself?
Yeah, look, it's definitely picking up, and it's just the cycle, isn't it? When the price of uranium goes up and the sentiment for investment in nuclear goes up, here comes a lot of new companies, taking positions, acquiring projects, M&A and all that. I mean, from a trading perspective, I mean, Curtis does most of our, sales and everything. He'd have a better feel for what's going on there. It's summertime. Summertime is usually a little sleepier than the rest of the year. But yeah, I think the key thing is that, if you go back a year ago, nobody was seeing long-term contracts signed. And now you're seeing it. You're seeing companies announcing that they have signed a long-term contract, particularly with U.S. utilities, the contracts that we signed. So it's the cycle is on an upswing, and I believe that. And the thing that's real interesting that I'm seeing that is making a big difference on what's going on now is this whole inflationary environment, access to the people with the skills, access to people that have facilities that are built. I think a lot of people that haven't built their facilities are looking at the new inflated costs, and they're being pretty quiet. It's kind of amusing to me when I look at some of these press releases and people talk about a 43-101 or something done 3 years ago or whatever, and quoting the cost and operating costs and capital costs. And I think, well, what is it today? I can tell you it's not what it was 3 years ago. And even Cameco's been making noise about the inflation and people and incentive prices. The incentive prices a few years ago, people were talking, north of 50, 55. Well, they're not talking about 50, 55 anymore. They're talking like north of 75, if not higher. So yeah, it's just, again, interesting times, but I don't think nobody expected the Russia Ukraine issue. Nobody expected to have inflation that was almost 10%. Nobody was thinking ahead that all of a sudden you turn around, there's no workers. There's a lot of dynamics here, Matt, that I'm not sure where they all go, but it doesn't equate to lower costs on any front.
No, that's true. No, we've had a lot of companies come on here and make the same sorts of claims, but the reality is they've just gone and blown their brains out when it comes to renewing those studies, because we're seeing 40, 50, in one case 60% increase in the capex. That, for a lot of companies, is unsustainable. But you layer on, so not only is inflation, just to be clear, is not just the rising costs across the board for whichever aspect of operating your business, but also the cost of capital is not pretty at the moment. So for people building new facilities, for people perhaps thinking about building a plant, that goes out the window. So which brings us kind of nicely around to White Mesa. Again, I'm getting people contacting me and telling me, and I think even Sprott has just woken up to this, looking at some coverage you've got from them. White Mesa is the jewel in the crown. Not bad to get recognition. You've only been saying it to me for about 4 years.
Yeah, well, it's interesting, but I came back from Australia, I think it was 6 years ago. Everyone was saying that, White Mesa, the conventional, we're all dogs and you should just reclaim them and do away with them. But it's funny how that sentiment has changed. And I think really when you look at it, people are realizing the enormous potential of White Mesa, particularly being able to handle these natural uranium products that are a problem for everybody else. So we just kind of keep building on that story, and it's so hard to get permits right now. Like you said, you look at people in Athabasca over 10 years to get a permit to do a project in Athabasca, maybe 15, even in the United States. So it's there, it's constructed, it's paid for, long history, really in a quite a favorable cost of doing business jurisdiction, good workforce, good state to operate in, state of Utah. But yeah, no, it continually emerges, doesn't it?
Yeah.
The narrative on White Mesa in the last 5 years, as it's turned around immensely from where people were thinking White Mesa fit in to the whole, uranium business and the rare earth business. It just emerged very rapidly, hasn't it?
It has. So yeah, apologies for bringing it up again, because I know, like I said, we've been talking about it for 4 years. We talk about it most interviews, but it's it's the difference. It's the difference not because of what it processes. It's the difference between you're in control of your margins, you're in control of your capital costs because you're not having to try and build a facility like this yourself from scratch. And again, we'll talk about something else we should talk about most times or occasionally over the years, which is toll milling agreements. You've got one in place with Consolidated Uranium because you've done that deal with they've made an acquisition from you. Has anything changed there? Is there anyone else that you've accepted onto your toll milling agreements list?
No.
Right. Okay. Thanks.
But look, we're never going to say never. But yeah, nothing's changed, and so we need to separate this crack and leach from the mill. That's going to take some time. We've got quite a bit of stockpiles that are out at the mill that need to be ran through. So yeah, nothing's changed, but I'm not going to say never, and I don't talk in absolutes, but yeah, it's again, it's unique, and it's there, and it's staffed. It's we got 60, 70 people working there full time. But yeah, we're in a very good position having that facility.
Okay, just so just finish off on the uranium, because I do want to finish with the rare earth component, right? I hear what you're saying with regards to people were 2 years ago talking about 55. It's not 55 anymore. Do you think the utilities, there's a recognition? You've signed 3 contracts recently. Is there a dawning realization from the utilities that they need to step up to the plate when it comes to the number? And have you got an idea of what you think they think that number is? Because we're coming into utility conference season. We've got one here in September in London, WNA, and then I think you guys there's another one in October. I think it was Savannah last year. I'm not quite sure where it is this year. Decisions need to get made, don't they?
Yeah, no, look at the utilities are trying to build their books as well. I think that most contracts right now are they're north of 50 a pound. That still doesn't make sense for a lot of people that that are starting new projects. Now, people that are already in the business and everything they have is paid for, ready to go. Like in our case, we have inventories and we have alternate feed. We are planning to, to start up a mine. But yeah, the prices have got to keep going up. When I talk about, I think generally speaking, you could say that, I think the floors are probably in the order around 50, I would guess, with potential to flex up as prices go up. But it's changing. I mean, the spot price has been in that mid to high 40s. Long term is around 50, and if that's not high enough to justify new production, well, what has to happen? Prices got to keep going up. So for us, I think that if there's definitely realization that source is important. Okay, sources from allies, sources of the United States, and diversification, particularly from Russia, is important. But the price has still got to go up. And for us, we're watching the market obviously on a daily basis. And as the price goes up, we'll look at securing more contracts. But there is definitely a dialogue going now, which didn't exist a year ago. And that is refreshing, and it needs to continue.
Right. Okay. Well, look, it definitely does need to continue. And I'm looking forward to September and October to kind of see what the changes, because I think there was an expectation this time last year that it was ripe. The time was right last year, and we've had Russia since that happened since then. A very fluid environment on that front. So yeah, it would be interesting to see what happens before the end of this year for uranium companies. Obviously, you've got vanadium in the background. We've talked medical isotopes in the past, recycling in the past. You've got a stack of cash. Well, certainly got working capital facility in place, and you've got cash and securities at hand. So you're okay for money right now. And I think people with money have options, and people with money right now look quite smart with the optionality it gives them. There's a few stranded assets. You've always maintained that you're good for uranium in terms of assets. You've got enough assets there, and I guess you also want to make sure you remain focused on rare earths. So can you just confirm your use of capital is set, where you're not looking to be entrepreneurial in the current economic environment? Well,
we're always entrepreneurial, but yeah, look, we're deploying deploying capital to the uranium assets and to the rare earths. If you look at kind of looking out over the next couple of years, 3 years, I think the most capital intensive part of our business will be the rare earths. Having a lot of our mines, constructed and ready to go, they require capital. But I mean, to put it in the context of, if we kind of went full tilt on our uranium assets, and it's not really so much capital as is working capital, we can do a lot of damage for $40 or $50 million. On the rare earth fronts, it may be $100, $200 million or something of that order. So no, we're in a good position here. We hope to be generating some profits from these uranium sales, and we sold some vanadium at nice pricing. We've got a lot of trading stock, but the other thing we're doing that we're reinitiating is we've got a number of projects that we were permitting, and these are things like Roca Honda, that we kind of pulled our foot back off the accelerator. We're putting the foot back on the accelerator on some of our projects because it's a good time to advance permits on a number of the projects we have. Now, most of our projects are permitted, but we're starting up a new permitting initiative on a number of our assets that we backed off on over the last 5 years.
Okay, but businesses are in business to make money, right? And public companies sometimes forget that, right? So we talked about uranium pricing and what your incentive price to incentivize you to, commit capital, commit resources, et cetera, to that. And, vanadium market is, has been volatile. It's kind of a little bit erratic, and recycling projects are nice. They do good. They put you in good standing. But the thing it seems to me that people are getting excited about with rare earths is, one, the huge realization from governments around the world that they need to get their own independent critical minerals nailed down themselves. So the US talking that game for you is good, but it's also hugely profitable. The margins are good currently. One suspects they will remain good if you can do an ex-China solution. So are you clearly cognizant of that, but how do you allocate resources going forward? And, are you talked at the beginning, the outset, you're a critical minerals company, the vanadium, the rare earths, the uranium, all good. But given the margins involved, and if I looked to Linus, I mentioned, it's a $6.5 billion US company just focused on rare earths. What is Energy Fuels going to be going forward?
Well, my goal is to make it a multi-billion-dollar company, and we want to chase the Linuses. We want to chase the MPs. Look, I think, and I've said this to you before, on the uranium front, we are U.S. significant. We've been the largest producer of uranium in the United States, but on the world scale, we're not ever going to be a Kazatomprom. We're not going to be a Cameco. But we can be significant in the United States because we can fulfill a chunk of the U.S. requirements as a uranium company. I believe we can be world scale on the rare earths because of the unique position we're in. I think that, in addition, the margins, I believe, will be better on the rare earths. And lastly, even though, the politics of these elements have changed dramatically on uranium, there's bipartisan support for rare earths. It's easier, I think, to get support on rare earths than it is on uranium. So we're going to be both. I've been doing uranium, Matt, as you know, for over 40 years. I've got uranium going through my veins, but I think our best margins are in the rare earth area. And so, we're going to look at opportunities that give the best return to our shareholders. That's what I'm supposed to do, give the best return to our shareholders. And so we're going to look at our business as it evolves on that basis, return to shareholders, and profitability and margins and deployment of capital based on those factors.